Hello and welcome. You are watching Business Today Television. I am Sakshi Batra and this is the earnings special edition on Business Today Television. And the company on our radar for this edition is the IT firm Cyient Limited, which is a global intelligent engineering arm of the IT services company. And the company has reported its earnings as well. It's announced the Q4 earnings for this quarter. That's the March 31st ending quarter of 2024. What we've seen is that the consolidated revenues have risen 6.3% to 1861 odd crore rupees for the January to March period, and this has beaten most of the analyst estimate on the street as well. Now, what has led this kind of a top line growth is that the company's digital engineering and technology segment has accounted for 80% of the overall revenue here, and this segment has also recorded a net profit that's climbed 15.9% to 189 crores for the period as well. To discuss and to decode for us the earnings insights and the outlook going forward, I'm now joined by the top management of the company. Mr. Karthikeyan Natarajan, the Executive Director and the CEO of Cyient, is joining right in. Welcome, sir. Thank you so much for taking the time out for this discussion. My first question to you would be, prima facie, I'm looking at good set of numbers right here. How do you yourself assess the Q4 earnings? Has it met your own expectations, or do you believe that, there could be some more, upticks that you would have willing to see?
Thank you, Sakshi, for getting into a discussion with us and appreciate your time. And probably it did not meet our own expectations. We have fallen short in the DET business, which is digital engineering and technology business, and led by some of the macro issues that we are seeing. And we are confident about things will pan out well for the remainder of the fiscal 25. And we are also happy to report 12.9% in US dollar growth for the DET business, and which is one of the decent growth that we have seen for the last 12 months. And we have seen the growth led by sustainability, aerospace, automotive, and we are happy with where we are, and we hope we continue the growth momentum into fiscal 25 as well.
Right. So you did say that it probably has fallen short of your expectations, and that's largely due to the macro environment. So I wanted to understand, how is the demand scenario now going to be panning out? We've been seeing a lackluster demand scenario play out for the entire industry for some time now. But how do things really look to you as of now? Are there any signs of recovery really happening, or do you think the recovery could be some distant away now, sir?
I think we are seeing it as a mixed bag, and we have seen some of the segments have grown more than 20% for us, like sustainability has done, aerospace, automotive. All of them have done well for us, even in this macro challenging environment. And we do see some of them should get better in the later part of fiscal 25, be it on connectivity, semiconductor, and healthcare and life sciences. They should start coming back to the growth trajectory during fiscal 25.
Okay. So I also wanted to understand, as far as the client spend is concerned, what we've noticed that for your larger peers as well in the industry, what we've seen is that they have been facing client spend relating cuts, and those have been one of the biggest concerns. But for your DET segment, you mentioned in the press release that it's benefited from the continued client spending this time around. What have you been doing differently, and do you think that will continue to give you a tailwind going forward from here too, sir?
No, we have talked about on top of our core engineering strength, we started investing on digital and technology solutions over the last 3 to 5 years, and that is starting to pay off. And we have won two large deals during Q4 fiscal 24, and which are led by semiconductor and software and digital areas. And we have closed about 9 large deals of $197 million plus. And this gives us the confidence that we are in the right trajectory. Our investment that we made over the last 2 3 years are starting to pay off, and we are confident about the growth of where we want to be in the next 3 to 5 years.
Okay, so deal win have been strong, sir. What is the kind of outlook on this aspect, if you can share, with FY25 compared to FY24? What is the kind of momentum that you will see in the deal win category?
We have shared to our investors earlier today, and we said we are likely to be in high single digit in terms of revenue growth in constant currency terms year on year. And we want to be in the range of 16% as far as EBIT margins are concerned for fiscal 25.
Okay. The other factor that I wanted to discuss with you as far as the attrition and the hiring trends are concerned, where are you at currently and how do you see things panning out for you going forward, sir?
I think we have seen about 800 basis point drop in attrition. We have seen this is the lowest quarter of attrition over the last 8 or 9 quarters. And I think the supply side has definitely stabilized a lot better. And our initiatives around retention, our initiatives around upskilling our associates, and making sure we have won a great place to work in 2023. And we are trying to make this as an environment people would love to come and innovate, and I think all of them are paying off. And we are happy to report that we have got about 1,000 plus leaders who are certified on generative AI, which is one of the
Yeah.
key focus area for us in the last 6 months.
So exactly on generative AI was my next question, sir. Everybody wants to understand as far as the industry is concerned, and now you can give us your own perspective as well as to how will things pan out with more and more focus and demand from clients to focus additional projects as far as Gen AI is concerned. So would you be looking at hiring externally for this segment, or are you looking at upskilling your existing employees for this aspects? How will things pan out for you?
I think it will be a combination of both, and it is very critical that the workforce of what we have, about 16,000 plus, are getting trained or getting ready for the future. And we have been investing on some of the digital and technology training over the last 2 3 years. We'll continue to do that, and we'll also augment with specialists who can help us with some unique skills about generative AI, data analytics, and how do you think we can bring people with broader artificial intelligence experience. I think that's going to be a combination of what we will do internally as well as from externally.
Okay, so also wanted to understand, since you've been mentioning which are the key factors or the growth drivers for this quarter. You talked about sustainability, auto, aerospace, as well as transport connectivity. That's been one of your key focus areas. Going forward, do you think these will remain as the key for driving factors for you in the pecking order? How is your focus going to be, and where do you see maximum amount of revenue and margin contribution to come in from, sir?
We have made ourselves with the four strong business units. We created it as a diversified portfolio. And as you would have seen, the sustainability has led the growth for the last 8 successive quarters. We do expect they will continue to grow even in fiscal 25, and followed by automotive and mobility and aerospace. And we do see semiconductor and connectivity start joining the growth trajectory in fiscal 25 during the later part of this year.
All right, sir. As an outlook, sir, now for FY25, you did mention high single digit constant currency revenue growth and 16% of the EBIT margins. Where is this contribution really likely to come from? Is it going to start away, give you contributions from Q1 itself, or do you think it's the latter half of the year that will give you most of the heavy lifting for these numbers, sir?
Yeah, we do expect it to be a soft Q1, but we are confident that the growth would come back from Q2 onwards and maybe for the later part of the year. And that's our current estimate as we start heading to fiscal 25.
All right, sir. Many thanks, sir, for being with us on this special edition and sharing with us all your insights on this quarter. All the very best to you for the upcoming quarters as well. And here's hoping that we can catch up very soon with you again to really understand how the business is shaping up. Many thanks, and again, all the very best to you, sir.
Thank you so much for inviting me. Thank you.
Thank you, sir. All right, viewers, so we will wrap it up at that. Cyient Limited and Cyient DET numbers for you, and the kind of insights that the management had to share. Q1 could be a little soft, but growth could start trickling in back from Q2 onwards. High single digits of growth expectations for FY25 as far as constant currency revenue is concerned, and an EBIT margin of 16% is where the management has pegged their focus on for FY25. We'll continue to get you important earnings conversations for you to get a larger understanding of what is the vision of the top managements of the companies that are listed on stock exchanges, for you to take better decisions about the companies that you hold in your stock portfolio. Many thanks for viewing this, but do stay tuned and don't forget to like and subscribe to our channel.